Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The information shared here is for educational purposes only and is not a recommendation to trade.
Hello traders, thanks for joining me today on episode number 2745. It is Thursday, Feb 12th, 2026, 7:47 a.m. Chicago time. A lot to cover today. There's a fair bit to talk about. Mainly, we got the jobless claims numbers, and they were a little bit hotter than expected. 219,000 new 4-week average on the claims versus 214. We're seeing a pop higher a little bit in the NQ, and given the NFP numbers yesterday, the market has shifted quite a bit in terms of interest rate expectations. So those are the main drivers. That and the information that and what we have relating to Micron. If you have not looked at the cost of memory chips lately, you might want to take a look. They've more than doubled. This is thanks to the AI craze. The value of electricity, the value of memory chips, GPUs, all that stuff is just getting spiked. But overall, the tech sector is just getting quite bifurcated between AI infrastructure winners and then those who are seeing massive costs, and the shareholders are asking, where's the value now, right? So those are the key elements. Let's take a look at the summary sheet here from Convergent Trading. You can always get this as it drops on Twitter at x.com/conv trading, CONV trading. Looking at where the market is this morning, we do have a pop in the DAX. The Russell being a very interest rate sensitive index with the small caps is looking a little bit higher this morning. Mild risk on across the board on the indices. We're seeing crude pull back a little bit from the 65 handle. We talked about this a little bit yesterday, that the 65 is a battleground, and it's likely to push to 66. It got pretty close yesterday before it dropped off. Silver's off today, down 1.29%, but not seeing the volumes. I mean, if you look at a gold or a silver chart, it looks like it's not the sexy dance partner that everybody has been vying for over the last few weeks. So it's not the numbers, the RNR vol for that sector for the metals right now is getting a little bit crushed. The crypto Bitcoin still sticking around the 67 to 68,000 handle. Ether has not done very much, has been hovering in the 1950 to 2000 range. Looking at the S&P this morning, the S&P is in a P-shaped profile. It's got a bit of a tail on top that it just put in just now after the numbers. But generally, it's a P-shaped profile, clear rejection of the lower prices into the 69.50 handle. The low is 69.52. The inventory is 85% long, and the volume's 131,000 so far, pretty much in line with the mode. You can see the mode down here at 150,000 for the overnight session over the last 252 days, or 1 year of trading. There are 252 days, 252 trading sessions in a year, and the mode, or the most common volume, is about 150,000, and so far this session we're at 131. I expect it to be at about 150,000 once the market opens in about 40 minutes or so, 38 minutes. So that's where that is. The news is the news. I'll let you read that. I'm going to move to the technicals right away because that's why we're here. I'm not going to do a recap of yesterday's video today. I just feel like this is something you can watch, but you will recall that we had discussed two scenarios, one up, one down, and the market really was was very generous, so to speak, with its gifts yesterday, and it gave both. So we tested the supply zone up top. If you recall, we were in this bar right here when I did the TraderBite yesterday at 7:30 Central. The non-farm payrolls number came in, and it was a lot stronger than expected. The unemployment rate dropped by 10 basis points, and I was telling you all that there's quite a bit going on here to have that much in terms of collisions. um, in terms of collisions says that there is there are limit offers that are supplying the market in those areas, and this creates kind of a supply zone up here. Are you hearing my news feed in the background through my microphone? If so, I will turn it down, but I don't like turning down my news feed. Um, okay, so we get into the supply zone. We push through by a little bit on the open. We open at 7,003 and we squeeze through the overnight high. So we got our overnight stat to the upside right away. We managed to push to 7,011 and immediately we get this strong selling spree right through the LIS. The LIS zone, if you look, has not moved in a couple days. Like it's just, from Monday onwards, it's just been in the same kind of zone, and it's still here, folks. This really describes a balanced market. When I'm not moving the key LIS zone, this is something to pay attention to because it's just saying that the over under or the key price zone that might shift the auction from bullish to bearish, buyers controlling versus sellers controlling. We always want to identify that in the narrative. The fact that it has not moved tells us that we are pretty much in balance. You could see the LIS now has the MCV of this range contained within it. If you're confused by the terms that I'm using, you can go to convergenttrading.com and look at the useful info menu item at the top, and then you can look at the glossary. There's a glossary, and there's just a lot of information there. You can find out what this all means. Again, it's convergenttrading.com. So, what do we have here in the S&P this morning? Pretty straightforward. This looks like we've consolidated down below. We tested, remember this retest zone here was here yesterday. This is how do we come up with this zone? This is where the sellers failed to carry the market lower. If you recall, on Monday we came in and we had done an excess low, pushed back to VWAP. Look at this. That's the narrative. We had tested VWAP throughout the session. We pushed back to VWAP, and then we tried to retest on the open. That retest failed. Look at the volume here. It's very, very poor. We open, we push down. We are unable to retake that excess low, and then we turn around, push, and we build a P, which tells us that there's a buying imbalance in that excess low. Immediately we mark that as a key reference area. Excess lows, excess highs, single prints. These are all artifacts that tell us that the market, there's some change, or there's a battle that was won by one side or the other, and we are going to mark that. The LIS is really looking for areas where the market battled, but both sides participated, and one side ended up losing in the short term, right? So we push up, we create this high, we retest the high, and it's a failed auction. We immediately drop through and we retest this excess low, right in the mid of that excess low pretty much. And then what do? We come right back into the LIS and form our point of control for yesterday. So we are too expensive up here, short term, right up here. We are too cheap down here, and we are in the middle, and here we are battling that quote unquote too expensive price up there. Do you see the story? So when you look at a candlestick chart, it's all pretty. Um, you can make the chart look pretty, and you can make the nice colors, and you can put a profile and all that stuff, and it may look very professional. But that's not what matters. What matters is the substance. Like it's like picking a wife, You can't just go for looks, right? Maybe you do. I don't know. You got to look for substance. What is underneath the surface? And the auction underneath the surface is the whole premise behind what I've been doing for the last 20 years. And it's quite steady for me to understand the auction and see what's happening underneath the hood, how the machine is working, and what's working, what's getting results, and what's not. That's how I form my bias. And then it's just left down to looking at setups. We have about 5 or 6 setups we look for depending on whether the market is in balance or is out of balance, or we're shooting for a trade that is looking for balance going into balance going into imbalance, or if the market is likely to remain balanced. So here we are, we're making this effort to break out, and we're struggling. However, the LIS is underneath us here, right? The LIS remains underneath us, and so the idea behind today's plan, primary scenario, is that we keep butting our heads against that 7,000 figure. So the expectation is we take out the overnight high, and then we're opening inside of the range. So the expectation is we're likely to get back into the LIS, probably tag the settlement price, and then make an attempt, make a run, test to see that there's buying interest down below at the unchanged mark in the LIS against the VPOC, all happening in the same space. Test to see that there are no aggressive sellers down there, and now we can confidently push back up and check that liquidity zone. And overall, the expectation is for us to check these longer term references up here, the monthly high and the prior week's high up between 27 and 31. The expectation is we are likely to take those out. If you look at the daily, we really haven't given up much from the all-time high. It's 8 a.m. here, and I do have to run here in a minute. Let's look at the NQ. The NQ, same situation. The NQ has been kind of bopping around this zone here, above and below, above and below. The key LIS is right below us. It managed to push into the buying excess. Same story in the NQ, except the NQ managed to take out that overnight low on Monday morning. It poked through before it ran up, and then there's a supply zone. Look at those bubbles up here in the NQ, and we're pushing through them. So we expect this to be a turbulent area, thick, thick, thick air for us to fly through. So we don't expect it to run through so easily. The expectation this morning is it's likely to come back, rebalance a little bit into the LIS, and then potentially make a run. The target up above in the NQ is a key supply area up there in the 25,650 to 25,700. This is the area I'm expecting the NQ to retest on any push higher. Okay, does that make sense? Hopefully it does. Let's take a quick peek at crude. Crude, like I said yesterday, it is really trying to gun for the 66. It's had a lot of problems hanging on to the 65 handle. Last week's high 65.53, and yesterday it opened, pushed up, and got below. As soon as it got below, it retested the mid right there. Just a beautiful set up there, retested the mid, and then came back down. And then we found buyers here at the cash close. And since then, it's been kind of sideways. So we're using that as the LIS right in here. This zone right in here is the LIS, and crude is below that LIS zone, so the bias is short. So structured trades are authorized on the short side, not on the long side. Long side are short-term scalps. The idea here, now that we're open, we've been open for 2 minutes, the expectation is we're likely to squeeze back into unchanged into the LIS, but overall, I'm expecting crude to start moving down. The catch with crude, though, is news. You know, another carrier group is moving to the Strait of Hormuz or to the Middle East somewhere, and they're trying to put a lot of pressure on Iran. Iran's not budging, and so this may lead to more rockets flying, and if so, crude is likely to respond to the upside as supply comes out of the market that normally goes to China. And so if supply comes out of the market, demand staying stable, prices have to go up. You know, for those of you who studied Economics 101. But if there's no news, this thing is very, very likely to tend down. I'm expecting it to continue to move all the way down into the 63 even area. And that's the key buy test retest zone. Okay, is that cool? I will not be here tomorrow. I'm flying back to Chicago tonight, but you know, I haven't seen the kids all week, so I'm going to take the time to take them to school and spend some time with them in the morning. So I won't run into the office as early as I usually do, which means no video tomorrow. Okay, mind your risk into the weekend. It's a long weekend. There's a holiday on Monday, President's Day, so tomorrow's close is likely to see some rebalancing of risk coming into the weekend, especially with Iran and da 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 da. You know, Netanyahu just came to the White House again. I'm sure he scored another loot of American taxpayers funded weapons. Um, and so they're going to do something with Iran probably over the next few days. Who knows? So just, you know, just don't go into the weekend with a position, is my opinion, and don't risk too much on one trade. You're not here to get married. You're here to date as many trades as possible. Okay, so don't get stuck on a trade. Don't ever defend a trade. Good luck, and I'll catch you on Tuesday morning. That's it. Take care.